In this video, I will be sharing one of the simplest and easiest trading strategy using only 3 EMAs. But before we start, be sure to hit that like button and subscribe to our channel so that you don't miss on any of our new videos. With that being said, let's get into today's video. The strategy that I will share today is a trend following strategy. Therefore, we will buy when the price is in an uptrend, and we will look for selling opportunities in a downtrend. Fundamentally, we will be looking to enter the trends on pullbacks. To achieve this objective, we will use 3 exponential moving averages. A moving average is a simple indicator that plots the average price of an asset over a particular period of time. A simple 10-period moving average will show us the average price over the last 10 candles. Moving average helps us in 2 things: identify the trend and simplify the price action of the asset. When the price is in an uptrend, we see that the price stays above the moving average, and the moving average is sloped upwards. On the other hand, in a downtrend, we see that the price stays below the moving average is sloped downwards. In a sideways range, we can see that the price moves around the moving average, and the moving average stays flat. Another characteristic of a moving average is that they act as dynamic levels of support and resistance. So, in an uptrend, whenever the price makes a pullback to the moving average, it finds support and resumes the uptrend. Similarly, in a downtrend, the price finds resistance at the moving average. Different moving averages indicate different trends. We will use the 9, 20, and 200 period EMA. The 9 and 20 period EMA will show us the short-term trend of the market, and the 200 period EMA will show us the long-term trend of the market. In this strategy, we will look to trade based on the long-term trend of the market. We will use the 15-minute timeframe for this strategy. You can use the 30-minute and 1-hour charts as well. Let's now understand how these EMAs look in different scenarios. So, when the market is in an uptrend, we see that the price is above all 3 moving averages. The 9-period EMA is above the 20-period EMA. And the 20-period EMA is above the 200-period EMA. In this case, we can say that the price is in a short-term and long-term uptrend. When the price makes a pullback, we see that the price falls below the 9 and 20-period EMA. And the 9-period EMA falls below the 20-period EMA. We can say that the price is in a short-term downtrend and a long-term uptrend. This short-term downtrend is nothing but a small pullback on the long-term uptrend. So, we expect the price to resume the up move after a certain time. We will look to trade on these pullbacks. So, let's now look at the rules of buying and selling. For a buy signal, we want the price to be above the 200-period EMA. Then, we will identify a period where the price was below 9 and 20 EMA. This proves that the price was in a pullback for the long-term uptrend. Now, we want the price to touch the 200 EMA. When the price touches the 200 EMA, we expect the price to find support around that area and resume the uptrend. If the price breaks below the 200 EMA and starts producing candles below it, we will consider the trend to be over, and we will not trade in such conditions. But if we see signs of support at the 200 EMA, we will look for buying entry. For our entry, we will create a short-term trend line on the pullback. We will do so by connecting the highs on the pullback. Whenever the price breaks above the trend line, we will buy at that price. Now, let's look at the rules for selling. For selling, we first need the price to be below the 200 EMA. Then, we will look for an area where the price was above the 9 EMA and the 20 EMA. This shows that the price was in a pullback for the long-term downtrend. Now, when the price touches the 200 EMA on the pullback, we expect the price to find resistance at the 200 EMA and resume the downtrend. So we will create a short-term trend line on the pullback. Whenever the price breaks the trend line, we will place a short trade. Let's now look at some trade examples to understand the trades. Here is a buy trade. Here, we can clearly see that the price was in an uptrend. The price stayed above the 200 period EMA, and the EMA was sloped upwards. During this up move, we see that the price was above the 9, 20, and the 200 period EMAs. This means that the price was in a short-term and long-term uptrend. Then, the price breaks below the 20 period EMA, and at the same time, the 9 and 20 EMA give a bearish crossover. At this point, we can confirm that the price has entered a pullback phase. Therefore, we expect the price to pull back to the 200 EMA and find support. So, here, the price touches the 200 EMA. At this moment, we can confirm the price has actually made a strong pullback. So, we will create a short-term trend line by connecting the lower highs of the pullback. On this candle, the price breaks above short-term trend line. This is our entry trigger. So, we enter a buy trade on this candle. We will keep our stop loss below the 200 EMA. And we will place our targets at 1:1.5 risk-reward ratio. As you can see, the price gave a strong up move after our entry. Now, let's look at a sell trade. Here, we see that the price was trading below the 200 EMA, and the EMA was sloped downwards. Therefore, we can confirm that the price was in a downtrend. Now, our job here is to look for selling opportunities only. During this time period, we see that the price was trading below the 9 and 20 period EMA. This means that the price was in a short-term and long-term downtrend. Then, we see that the price breaks above the 9 and 20 EMA. The EMAs also give us a bullish crossover. Therefore, we can confirm that the price has entered a short-term uptrend. This short-term uptrend is nothing but a pullback in the long-term trend. So now, we want the price to touch the 200 EMA and face resistance. Here, the price touches the 200 EMA and even breaks above it. But then, it immediately faces resistance. The important point here is that, oftentimes, the price will break above the moving average and instantly reverse. That is okay. We have to allow some space for the price to reverse. So, we still consider this as an opportunity. We now create a short-term trend line by connecting the lows on the pullback. The price breaks below the trend line here. So, we enter a sell trade on this candle. We can keep our stop loss above the 200 EMA and can place our targets at 1:1.5 risk-reward ratio. As you can see, the price gave a strong down move after our entry. So here, I have shared with you a simple 3 EMA strategy that you can use today to reap rewards for the future. That brings us to the end of this video. If you liked this video, then be sure to hit that like button and subscribe to our channel, so that you don't miss on any of our new videos. See you soon.